Good evening everyone. Yung report ko ngayon financial losses from fraud, karugtong lang nung kay Ferlin. Yan. A research study published by the Association of Certified Fraud Examiner or ACFE in 2008 estimate losses from fraud and abuse to be 7% of annual revenues. This translates to approximately $994 billion in fraud losses for 2008. And the actual cost of fraud is however difficult to quantify for a number of reasons. Yun, mahirap malaman kung magkano talaga yung losses ng company. Kasi yung una, not all fraud is detected. Pangalawa, of that detected, not all is reported. Pangatlo, in many fraud cases, incomplete information is gathered. Next, information is not properly distributed to management or law enforcement authorities. And last yung too often, business organization decides to take no civil criminal action against the perpetrator. Tapos yung mga yung mga direct economic loss to the organization sa mga indirect cost reduce, including reduced productivity, saka yung cost of legal action, saka yung increased unemployment, and business disruption due to investigation of fraud need to be considered. Yun, bale yun kasama pa yun sa mga losses ng company pag nagkaroon ng fraud. Yan. Of the 959 occupational fraud cases examined in the ACFE study, the median loss from fraud was $175,000, while 25% of the organization experienced losses of 1 million or more. Ayan Yan, ito yung distribution of losses. Yung amount of loss, $1 to $999. Yung percentage ng fraud, 1.9%. Sa 1,000 to 999,000, 9,999, 7%. Tapos sa 10,000 to 49,999, 16.8%. Tapos yan, and so on and so forth. Yan, next yung perpetrator of frauds. The ACFE study examined a number of factors that profile the perpetrators of the frauds, including position within the organization, collusion with others, gender, age, and education. The median financial loss was calculated for each factor. Yan. Dito muna tayo sa losses from fraud by position. Yan, makikita natin dito sa table is yung 23% of reported fraud cases were committed by the owner or executive. Tapos yung median loss niya, yung parang pinakagitna ng data, $834,000. Tapos yung sa manager naman, 37% yung reported fraud cases, pero yung median loss niya, $150,000. Tapos sa employee naman, mataas yung percentage, diba? 40% ng reported cases yung sa employees. Pero yung loss niya, 70,000 lang. Bale pa, mas mataas yung average na magkaroon ng fraud yung employee, pero mababa lang yung loss. Pero sa manager naman, mababa lang yung percentage. Mas mababa yung percentage niya sa employee, pero mas mataas yung loss niya, median loss niya. And next tayo sa losses from fraud by collusion. And collusion among employees in the commission of a fraud is difficult to both prevent and detect. This is particularly true when the collusion is between managers and their subordinates employees. Management plays a key role in the internal control structure of an organization. They are relied upon to prevent and detect fraud among their subordinates. When they participate in fraud with the employees over whom they are supposed to provide oversight, the organization control structure is weakened or completely circumvented. and the company becomes more vulnerable to losses. Yan, dito sa table makikita natin yung yung dito sa table yung fraud involving collusion are less common. 'Di ba nakikita natin 36% lang siya compare sa individual fraud lang na mag-isa lang siya, 64%. Pero yung loss mas malaki naman kaysa sa nag-iisa ka lang. Syempre, kaya malaki yung loss pag may collusion kasi parang mahirap ma-detect kasi nga kasama yung manager sa paggawa ng fraud. Tapos dito naman sa table 12.5, losses from fraud by gender. Yung male 59% yung reported cases na may fraud na naganap. Tapos sa female naman 41% yung reported cases. Yan, dito naman tayo sa losses from fraud by age. Yan, makikita natin dito kada tumataas yung edad ng isang individual, mas malaki yung nakukos nilang losses sa isang business. Siyempre parang paliwanag ko dito kasi pag matanda ka na, mas marami ka ng experience, mas alam mo na yung flow ng business, kaya mas madali ka na lang nakaw ng asset ng isang business. Tapos dito naman sa losses from fraud by educational level, yung nakakos ng mga mas mababa yung educational level mo, mas mababa yung nakakos mong losses. Dito sa high school, 100,000 lang yung median loss na nakakos niya. Tapos yung sa college naman, $210,000. Sa postgraduate o sa may advanced degrees, responsible siya for fraud with a median loss of $550,000. Mas mataas kasi nga, syempre mas may alam siya sa flow ng business, mas malaki yung mananakaw niya. Mas malaki yung makukos niyang loss sa isang business. Yan, conclusion to be drawn. Dito sa position, individual in the highest position within an organization are beyond the internal control structure and have the greatest access to company funds and assets. Kaya mas malaki yung nakukos nilang loss sa isang business. Sa gender naman, women are not fundamentally more honest than men, but men occupy high corporate position in greater numbers than women. This affords men greater access to assets. Yan. Age. Older employees tend to occupy higher ranking position and therefore generally have greater access to company assets. Sa education naman, generally, those with more education occupy higher position in their organizations and therefore have greater access to company funds and other assets. Yan nga. Collusion. One reason for segregating occupational duties is to deny potential perpetrators the opportunity they need to commit fraud. When individuals in critical position collude, they create opportunities to control or gain access to assets that otherwise would not exist. Next na, yung sa fraud schemes. Fraud scheme can be classified in number of different ways for purposes of discussion. This section presents the ACFE classification format. Yung nabanggit lang dito, yung 3 broad categories of fraud schemes are defined. Ayan, yung una, fraudulent statements. Next, corruption and asset misappropriation. Yung i-report ko lang dito yung fraudulent statement. Tapos, si Erica saka si Jacoby na yung mag-report sa iba. Yan, fraudulent statements. Fraudulent statements are associated with management fraud, whereas all fraud involves some form of financial misstatement to meet the definition under this class of fraud scheme. The statement itself must bring direct or indirect financial benefit to the perpetrator. In other words, statement is not simply a vehicle for obscuring or covering a fraudulent act. Yun, yung example dito, misstating the cash account balance to cover the theft of cash is not financial statement fraud. On the other hand, understating liabilities to present a more favorable financial picture to the organization to drive up stock prices does fall under this classification. Yan, makikita natin dito sa table. Based dun sa ACFE's fraud study, 10% lang ng reported cases yung fraudulent statement, pero yung loss niya $2 million, mas malaki compared dun sa dalawa. Yan, next na tayo dito sa underlying problems. Lack of auditors' independence. Auditing firms that are also engaged by their clients to perform non-accounting activities such as actuarial services, internal audit outsourcing services, and consulting lack independence. Yan, the firms are essentially auditing their own work. The risk is that the auditors, they will not bring the management attention detected problems that may adversely affect their consulting fees. For example, yung sa Enron's auditor, Arthur Anderson, were also their internal auditors and their management consultant. Yung diba yung sa Enron's, parang yung una, yung si Arthur Anderson, yung ano lang siya nun external auditor, tapos hanggang sa naging internal auditor sila, parang nagkaroon sila ng relationship. Yung external auditor saka yung client nagkaroon ng relationship, kaya nawalan ng independence kasi nga meron silang relationship. Bale, mas malaki yung chance na magkaroon ng fraudulent statement. Yun, next is lack of director independence. Many board of director are composed of individuals who are not independent. Examples of lack of independence are directors who have a personal relationship by serving on the boards of other directors' companies, have a business trading relationship as key customers or suppliers of the company, have a financial relationship as primary stockholders, or have received personal loans from the company, or have an operational relationship as employees of the company. A notorious example of corporate inbreeding is Adelphia Communication, a telecommunication company founded in 1952. It went public in 1986 and grew rapidly through a series acquisition. It became the 6th largest cable provider in the United States before an accounting scandal came to light. The founding family, John Rigas, CEO and Chairman of the Board, Timothy Rigas, CFO and CIO and the Chairman of the Audit Committee, Michael Rigas, and the VP for Operation and the JP Rigas, VP for Strategic Planning, perpetrated the fraud between 1998 and May 2002. The Rigas family successfully disguised the transactions, distorted the company financial picture, and engaged in embezzlement that resulted in a loss and more than $60 billion to shareholders, whereas it is neither practical nor wise to establish a board of directors that is totally void of self-interest. Popular wisdom suggests that a healthier board of directors is one in which the majority of directors are independent outsiders with the integrity and the qualification to understand the company and objectively plan its course. Yan, dito tayo sa questionable executive compensation schemes. A Thomson Financial Survey revealed the strong belief that executives have abused stock-based compensation. The consensus is that fewer stock options should be offered than currently is the practice. Excessive use of short-term stock options to compensate directors and executives may result in short-term thinking and strategies aimed at driving up stock prices at the expense of the firm's long-term health. Yan, in extreme cases, financial statement misinterpretation has been the vehicle to achieve stock price needed to exercise the option. Yan nga, as the case in Point Enron's management was a firm believer in the use of stock option. Nearly every employee had some type of arrangement where they could purchase shares at a discount or were granted option based on the future share prices at the Enron's headquarter in Houston. Yan, basta yan. Di ba nga, natatandaan ko yung isang employee doon, yung retirement compensation niya, parang ininvest niya sa Enrons. Kasi nga parang ganun, hinihikayat nung Enron yung mga employee niya na mag-invest sa kanila. Tapos, pinapataas nila yung stock prices nila para mas mahikayat na mag-invest yung mga employee nila. Ginagawa nila yung mark to market accounting. Inaalaw yung mark to market accounting, inaalaw nun yung company to write unrealized future gains from some trading contracts into current income statements. Kaya bibigay ng illusion ng higher current profit. Kaya mas tumataas yung stock prices ng Enrons. Kaya mas nahihikayat yung mga employee na mag-invest. Next is yung inappropriate accounting practices. The use of inappropriate accounting accounting techniques is a characteristic common to many financial statement fraud scheme. Enron made elaborate use of special purpose entities (SPEs) to hide liabilities through off-balance sheet accounting. Yun nga, yung SPE ginawa ng Enrons na dump site of trouble assets. Transferring those assets meant that they were kept off Enron's books. Bale, para mawala dun sa books, nilalagay nila yun dun sa SPEs nila, making its losses look less severe than they really were. Yan lang po, thank you. Si next reporter po is si Erica Agustin.